April 20th, year 2023. The copyright on this video presentation, along with the accounting problem solutions, belong to myself, Mijanur Rahman. The company Hexagon Inc. produces wheat products. Mr. Hexagon buys wheat directly from the farmers, then grinds them in the mill. During the production process, it produces main products and byproducts. The main products are white flour and brown flour, and the byproducts are wheat barn and wheat germ. During the milling process, but about 2% wheat remains ungrind. The mill considered them as a scrap. Scrap wheat or wheats are A, 50% returned to the raw material section, and B, and the other 50% is sold in the market. The company incurs about 300,000 in joint costs. Our goal to allocate the joint cost by using A, production method, or B, sales method. The information given to us with respect to quantity, you can see highlighted in yellow. Again, the main products are white flour and brown flour. White flour quantity produced 400,000, quantity sold in the market 300,000. The total value of 400,000 white flour is 800,000. Sales value per pound is $2. With respect to brown flour, the company produces 300,000 pounds, and the sales value of 300,000 pound is 450,000, and the unit sold, this is the column, is for the unit sold. I'm going to highlight that in Kaon, okay? So you can see where I can choose magenta. And then the company has byproducts with burn. These are the information that is given to us. Again, this row right there shows the company, how much amount it produces. And this rows highlighted in magenta shows the sales value per pound in the market. And this value on the sales value column right here, highlighted in blue, it shows the total sales value of this 400,000 pounds, 300,000 pounds, and whatever in the kiln sale. And units sold is here. This is very important to us with respect to, I'm going to highlight that in red. Okay, so we are dealing with these 4 columns of information, very important. Now we move to which method to choose. Okay, so here's some common questions that can arise. A, if the company has joint costs, then it would, then right here, if the do you have joint costs in your firm? If the answer is yes, then we move to second questions. During the production process, do you get byproducts? If the answer is yes, then we follow this highlighted in Kaon. Step 1, we need to allocate the joint cost to the byproduct and main products by using sales method or production method. In step 2, once the costs are allocated to the main products and byproducts, then we use sales method to further allocate costs by using sales value split off method. So we know there are 2 steps involved right there. In step 1, we allocate production cost to the joint cost to the byproduct and main products. In step 2, once that is done, we move to use the sales value split off method if we have more than one main product. And then in question 3, during the production process, do you get byproducts? If the answer is no, then you move to step 2 directly. You don't need to consider step 1. You move to step 2, consider the sales value split off method, or you could choose NRV method, or you could choose physical quantity method, okay? These are the methods that can be used if we don't have any byproducts, okay? This, you could read it at your own time. During the discussion of the problem, you will have answer for this. If I have time, I'll talk about it. These are our main products. These are our byproducts highlighted in yellow. These are our scrap wheats. It can be used as raw material or can be sold. You know, whatever the company decides to do with that, let's go ahead with our production method. In production method, what you do first, this is a production method. Let's highlight that in magenta. First, we allocate the cost to the byproduct right there. And how do you do that? To allocate the cost to the byproduct, we would simply, I'm going to show it here on the side. We would simply add this to row, okay? The fair market value or the total sales value of the byproducts. So that would be, again, 80,000 plus this 56,000, 136,000. Does this to sell match highlighted in green? Yes, it does. Once we find out under the production method, we're dealing with the production method now. Let's not consider the sales method at this time. We allocated joint costs to the byproduct, that is 136,000. Then we move to main product. It's just simply this 300,000 subtract this byproduct value, okay? That is 164,000. If you add this two row, if you add this plus this, that would give you 300,000, okay? Highlighted in red. Production method allocates cost to the byproducts. Sales method does not, okay? So the moment we allocate joint cost to the byproduct, we would record a journal entry. You would debit the wheat barn as an inventory and wheat germ as an inventory. And then you would credit the WIP inventory by 136,000. Okay. In step 2, we would allocate this 164,000 in here, highlighted in Kion. We're working on the Kion sales, okay? We would allocate this $164,000 in, between the two main products, white flour and brown flour. So how do you do that? So we use the sales value method in this step, okay? This is step 2. In step 1, we allocate the joint costs between the byproducts and main products. In step 2, if we have more than one main products, then we would have to further allocate the joint costs to the main products. Here, we allocated $164,000 to the main products, white flour and brown flour. Now, we'd have to allocate this $164,000 between these two products. we are given, we just simply copy down these cells. I'm going to reset this color. We just simply copy down this up to the sales value, all of it, if you're given this information. If not, then you'd have to manually calculate it. So white flour, we produced 400,000 units, and brown flour, we produced 300,000 units. The fair market value for each pound of white flour is $2, and you can see that highlighted in cyan. And brown flour, the fair market value for each pound is $1.50 highlighted in green. We just simply, once we figure this out, we're working on this for now. I'm going to highlight that in cyan. We just simply multiply 400,000 times 2. That would give you 800,000. And then we move to line 2 right there, highlighted in green. We simply multiply 300,000 times, we simply multiply 300,000 with $1.50. That would give us 450,000. Once we find out the sales value right there in this column, highlighted in yellow, perhaps we can highlight that in neon, we simply sum this to 800,000 plus 450,000. That would give us 1,250,000 in total sales value, or the total value of the goods produced. Okay, and this is known as FMV, fair market value. Okay, once we given the fair market value, we would use always sales value split up method. So if we are given that information, we would use the sales value split up method. Again, I need you to pay attention to this. Sales method and sales value SPLIT of method. Okay, sales method is used for allocating joint costs to byproducts. Okay. Once we find out so if we have byproduct, if we have byproducts and main products, then you would first, step 1, we would use this sales method. Once either we could use sales method or we could production method. I'm trying to demonstrate there's significant difference between sales method and sales value split up method. Once we allocate the cost to the byproducts, then or byproducts and main products, and then we use the sales value split up method. Okay. So this is the table that we're working now. So we're up to here. We calculated the total sales value with respect to the main products. We simply get the percentage of each products right there. So we divide 800,000 by the 1,250,000. That would give us 64%. 64%. Okay, that would give us 64%. That is with respect to how much percentage of the white flour with respect to the main product, 64%. The same way we would calculate. So I could show this to you here if that helps you. Okay, these 800,000 divided by 1,250,000, 64%. And then we divide 450,000 divided by is 1,250,000. That gives us 36%. We need to sum this up so we know our information is correct or numbers are correct 100%. Then we just simply place the joint costs here, which is 164,000. We just calculated over here, highlighted in green right there. Okay, we calculated that. We just simply paste it there. Once it is pasted, we just simply multiply these 160. We just simply take 64% of $164,000. That is $104,960. The same way we go down the row below in highlighted in yellow. Perhaps I could get different color so you don't get confused. In magenta, we just simply take 36% off 164,000. That would give us, and how do you do that? Simple. You multiply 164,000 multiply by 36%. That would give you $59,040 right there, right there. I just calculated that for you here and highlighted in pink, not pink, magenta. Right? We can also get the unit cost. How do you do that? We know the, the white flour now have a final joint cost, which is assigned to it $104,960. We just simply divide $104,960 by the total volume it produced, which is 400,000. So you divide 104,960 divided by 400,000. That would give us 26 cents. Oops, let me have additional. Okay, that would give you 26 cents roughly. I just calculated that for you right there, highlighted in magenta. The same way we would calculate the brown flour unit cost, highlighted in green. You can see that we would simply divide this $59,040 divided by this 300,000. I'm going to write that for you so you could see that. The 300,000 units, that would give you 19 cents roughly, or 20 cents. Okay, these two cells are this, they have the exact value. You can see that. Now we are done with the sales value split off method. The sales value split off method is used to further allocate the joint cost to the main products. Okay, now we do journal entries. And how do you do that? Simple. We have got, I'm going to reset this color over here. So I'm going to highlight the cells that we're working on, highlighted in green. We just simply debit the finished goods inventory with $104,960. Okay, that is the finished good inventory. We just debit that. And with respect to finished goods brown flour, we debit the $59,040. that is highlighted in green. I'm going to change that to highlighted K-on, okay? You can see that. I'm going to reset these cells colors because we are done with respect to debiting the finished goods. Now, once we debit this, we would fully credit the WIP inventory account, and that is total of these two numbers. That is 164,000 right there, okay? Once we are done with that, then we record the sales. We go back to our information that is given to us right there. What information given to us is that what is the sales value? We sold 300,000 units right there, highlighted in red. These 300,000 multiply by the sales value, which is $2 in the market. We sold those. We have to collect. We have to record the revenue right there, 600,000. I'm going to highlight that in Kaon, perhaps another color, maybe purple, orange. We don't use orange. Okay, so in orange, for now we can hide this. So what we do is, this is the information given to us, and this is our solution. We so far completed up to here. Now we need to record the sales. So these are completed. I'm going to hide this off. Now we're going to record the sales. How do you do that? We sold $600,000 with respect to white flour, and we sold 200,000 in brown flour in pounds multiplied by 150. That would give us 300,000. We add this to row to number 600,000 plus 300,000. That would give us 900,000, highlighted in orange right there. What we do, we first we recognize the cash or account receivable, 900,000, and then we credit the white flour and brown flour with respect to their sales value, 600,000 and 300,000. Obviously, this is what is sold in the market. This is not at the cost of the goods sold. So now, once we record the sales of these units, I'm going to change that to a neutral color. We're working with these cells over there in orange, and we no longer need this. We're only working with these orange cells right there. So now we know what is our cost. What is the cost that we need to record? Remember earlier we found out the unit cost for white flour and unit cost for brown flour right there. You also have it here as well. Okay, so now what we need to do, we would simply multiply by this with respect to white flour, how much we sold. We sold 300,000 units, multiply by this 26 cents. We could say 0.2624. We just simply calculate this. That would give us 78,000. These two cells match. The same thing for here. We would credit the cost of goods sold How do you do that? 200,000 pounds. When I say 200,000, I don't mean money, I mean pound. In pounds, multiply by cost of goods sold, and that is $39,360. We just simply multiply 300,000 pounds with 19 0.1968 cents. That would give us $39,360 right there. You can see it highlighted in yellow. This. We're working on this. Again, I'm going to show this to you. This unit that we sold 200,000 units in pounds. Perhaps I can show that to you here as well. Right here, we sold 200,000 pounds. Multiply by this. That would give you this number. Okay. So you also need to debit the cost of goods sold. How do you do that? We just simply add this to line, which is simply says sum, and we're gonna add this to row. That would give us this value right there. It is $118,080. Okay. Now we move to once this is with respect to main products. Okay. I'm going to highlight that in yellow, or maybe we could choose green. Okay. Our main products are white flour and brown flours. First, in a step one, once you find out the information, we allocate a step one, the joint cost between the main products and byproducts by using production method or sales method. Then, once we have our joint cost for the main products, if there are more than one main products, we use sales value method in a step two. We allocate the costs between the main products that is initially allocated by the production method or sales method. Then we do the journal entries with respect to finished good inventory, with respect to amount sold, with respect to cost of goods sold. This is for the main products. Once that is done, then we move to record the sale of the byproduct, because we did sell the byproducts right there. I'm going to highlight that in light blue. These are the unit that is sold. We would simply multiply 660,000 units that we sold, multiply by their market value per unit or per pound, 80 cents. The same way we would multiply 50,000 pounds, multiply by 70 cents. This is the total sales value. Total sales. Okay. So total sales value is right there. We just sum this up. So it says sum these two sales over here, right there. That would give us 83,000 in total sales value of the byproduct. So now I'm going to hide this. Okay, we no longer need this. So we're gonna hide this all the way up to here. So we're working on step 5 right there. I'm going to highlight that in the same color, the light blue right there. Okay. I'm going to, so we're working on the light blue right there. Okay. These light blue cells. The light blue sales. Okay, so we got cash worth of 83,000 right there. I'm going to highlight that in in red for you right there. So this is the cash, or you could say account receivables, whichever you like, but it is most likely cash because there's a byproduct. Okay, so account receivables done. We debited that. Then we credit the finished goods inventory, which is the wheat barn with respect to byproducts and wheat germ. So what are the respective units? We already calculated that right there, the sales value right there. And then sales value for wheat burn was 48,000 and wheat germ was 35,000 right there. You add this to number, that would be exactly 83,000. So you record the byproducts, you record cash, okay? Cash, not, in fact, not even SCR, okay? Usually cash, okay? Cash, 83,000, would burn 48,000. So cash, debit, 83,000, would burn 48,000, would germ 35,000. We debit cash, we credit the finished good inventory with respect with barn and with germ. We move to record the sale of scrap. And how do you do that? So you got cash here. We sold that to the market right there. I'm going to highlight that in red, okay, for a second. So you got cash for this amount because we sold that to the market. Scrap wheats, if it's not really wheat, it's like mashed up into pieces. So they might feed that to cattle, right? So we sold that in the market for $2,000. We had 10,000 units at 20 cents. That gives us 2,000, and this is our cash highlighted in red. Okay, and then we have 10,000 pounds. We returned it to the raw material highlighted in gray. We are returning this amount to the raw material section. We're thinking that we could, regrind it and maybe get some wheat out of it. We're working on the gray cells right here. I'm going to give that a gray color. We debit cash for 2,000. We debit raw material for 2,000. We credit the work in process inventory for 4,000. 2,000 plus 2,000, 4,000. So in a nutshell, this is our production method. I'm going to highlight that and all in Kion. Everything in Kion is our production method. Okay, right there. We're done with the production method. So the same information we're working on, same problem. It's just now we use the sales method to allocate the joint costs between the byproducts and main products. Remember, sales method does not allocate joint costs to the byproducts. It fully allocates costs to the main products. And why? They might have a reason for that. Okay, so now we know right away we don't have any byproducts. We don't allocate any cost to the byproducts. So it's black right there. Or you could say red. Red. There's nothing there. Okay, it's empty. An empty spot. Okay, so just put black if that helps. Okay. And then we go to main products. The entire $300,000 worth of joint costs highlighted in red over there goes into this red cell right there. Okay, this 300,000 comes here. Or perhaps I can change that to a different color if that satisfies you. Perhaps gray. Okay. So this is, we fully allocate the joint cost to the main products under the sales method. In step one, what do? We recognize we allocate the joint cost to the main products. So main products, 300,000, byproducts 0. Then we further in a step 2, because we have 2 main products, so we would have to allocate this $300,000 between the white flour and brown flour. So the white flour, the informations are the same right there. We were working in these cells. I'm going to reset these cells over there. We're working with these cells over there. I'm going to change the color to orange. We're working with these orange cells over here, okay? So now we move to, I'm going to also hide this off as well. You don't need that. We already find out what we need. Okay, so now in a step 1, we allocate cost to the main products, not byproducts. I'm keep repeating that so you don't forget. In a step 2, we allocate the joint costs. This is our step 2. Same way, exactly same thing. We just talked about it. 400,000 multiplied by 2, that'll give you 800,000. And then again, 300,000 multiplied by 300,000 multiplied by 150, that gives you 450,000. You add 800,000 plus 450, that gives you 1,250,000. You divide 800 by the 1,250,000, that gives you 64%. You divide 450,000 divided by 1,250,000, that gives you 36%, highlighted in green. Okay, you can see that. If you want me to show it to you, I don't mind. 800,000 divided by this, that gives you 64%, and 450,000 divided by 1,250,000, that gives you 36%. I showed you earlier, we can make that as a percentage if you like, right there. We have the joint costs. We just simply put this value from here. I'm going to highlight the cells, simply paste it over there. And then we have the percentage. We have this percentage. And now we allocate costs between the white flour and brown flour. How do you do that? We just simply take 64%, which is 0.64, multiply by these 300,000 over there. That would give you 192,000 right there. These two cells. The same way, what we do now is we are going to use 36% multiplied by these 300,000. 36% multiplied by 300,000 joint costs. That gives you 108,000. Okay, simple as that. We also find out the unit costs. How do you do that? We just simply divide this divided by the total unit produced. That would give you 48 cents. And this 108,000 divided by this 300,000, that would give you 36 cents. Okay, these two number, right? These cells highlighted in yellow. Okay, now we now it's time to recognize the finished goods inventory. The finished goods inventory, we divide white flour by the 192,000. I'm going to show that to you in a second. Right there, where you got this right here highlighted in count. This is where we get our our 192,000. We also debit the brown flour for 108,000 right there. We simply sum this up. That would give us 300,000. The cost of goods sold is higher, okay? Because of the joint cost is fully allocated to the main products. Then we move to record the sales. And how do you do that? Simple. We just take and how much you sold. Let's find out. Same thing right there. We sold 300,000. Multiply by this 2. That's 600,000 right there. And then we have these 200,000 units sold. Multiply by the current market price 150. That gives you 300,000. 600,000 plus 300,000. That would give us 900,000 right there. 900,000. We just simply record this as sales. We would record cash or SCR, whichever the case might be. With 900,000, we would credit the white flour with 600,000, brown flour with 300,000. Whatever your sales price is not your cost of goods sold. Let's say you're in a business of selling cookies, right? To make one cookies, it costs you, let's say, for example, $2. Obviously, you don't sell them for, your cost of the cookie is $2, and you don't sell them for $2, right? You sell them at a higher price. You sell them at, let's say, per unit, for example, $5. So the same thing here. You sold, this is just with respect to your 1 unit, right? It's an example. Okay, same thing. Sales here 900,000 is not the cost of goods sold. Same here, an example in our outside example, your cookies example right there, cookies or biscuits. Okay, so in these examples, your cost is $2. You sold it for $5, right? Same way, this 900,000 is your sales. This is the money you got from the customer, right? But you literally sold, you sold 200,000 units with respect to. So I'm going to show you here. White and brown. White flour, you had 300,000 units, and brown flour, you sold in pounds. Okay, this is what you sold. The market price, your cost, was, how much was it? Your cost was 48 cents right here, and your cost per unit was 36 cents. Okay, cost per pound, right? So obviously you didn't, you're in a business, right? You're there to make money. So now, right, you sold 300,000 pounds and you have a cost of 48 cents. You just simply multiply this with this to give, this is the cost of goods sold, COGS, right? All right, so the same way you would find this. I'm going to show this to you right there. 200,000 units multiply by this 36, that would give you 72,000. You add these two number, you're gonna add this, sum this right there. That would give us uh, 260,000 right there, okay? Right? Now, obviously, the same units, this is your cost, but with respect to same here, I'm gonna, if we, let's say, for example, let's say now, this is your cost, but your friend come to you and he offers you, so he offers you how much? So for white flour, he offers you $2, and for brown flour, he offers you 150 per pound. He say, hey, Joe, I'm gonna buy from you those, those white flours from you at $2. I know your cost is 48 cents, but I'm willing to give you $2 for it. So you just simply multiply this with this $2. That gives you 600,000, and this with this 150, right? These two things are different. This highlighted in green is your sales, and this is your cost of goods sold. Cost of goods sold. Okay. So this is your cost of goods sold. I'm going to say it's KON. The KON is the cost of goods sold. Right there. This is how much money you put to produce the white flour. And this is over there highlighted in green. This is what someone offered you that they want to buy. Okay, so now you need to, we already calculated this. We already recorded this in our journals right there. Right there, green with green, right there, you can see that, right? So you can see that this green, we already, we already, we already recorded that in our system. So this is, sales. Let's forget this now. We are not working. We are not working on this. We're working on this. This is done. So perhaps I could, I could put it down and paste it over there so you could see better. Okay, we are done with this. So now we need to record this. So this is done. I'm going to hide this. We're dealing with the cost of goods sold. These accounts. This is the cost you incurred. So you debit 216,000 as cost of goods sold. Since you sold it, you'd have to take it out from your inventory. So your inventory as with white flour, you credit this amount, 144,000. With brown flour, you credit 72,000. Highlighted in, I'm going to highlight that in KON. Okay. So you credit the inventory because he took it, your friend. You no longer have that in your possession. So those inventory is gone, right? He sold it. You assume that he sold it. So you'd have to credit the inventory and debit the cost of goods sold. Okay. We are done with this. and I'm going to delete this, so we no longer need that. Okay, now we are done with this guy over here too. Hydro. We move to, this is, we move to record the sale of byproduct. So the main products are done. Okay, now we record the byproducts. And how do you do that? Simple. We just simply cache. Okay, this is sales method. It's different from, perhaps I can show this to you now. So in in production method, you can see, I'm going to highlight the cells here to record the byproduct. You can see that right there. Highlight in green. See if I could bring it side by side. So this is under the production method, and this is under the sales method in Keon. Keon is the sales method, and this is under the production method. To record byproducts. So this under the production method, you can see how they're different, and this is under the sales method. Okay, you could also, if you like, you could also do breakdown as well. Um, so let's say, instead of having it like this, you could say, well, I want to show them as sales, sales barn, and then you'd show, you know, and you could say sales germ. Okay, you could do that as well, and then um, you would put there 48,000, and you would put there 35,000. Okay, you can also do that way as well. Okay, you can also do that, no problem. So this is the fundamental difference. Under the production method, you debit cash, you credit the finished good inventory. Under the sales method highlighted in Keon, you credit cash, and you directly record as sale. And the main reason for that is that because of the cost allocation in a step one, right? Because of the cost allocation. This is the main reason sales method directly inputs to sales. We're done with the step 5. The step 6, we record the scrap. And how do you do that? You record them as cash, 2,000, right there. You don't need that. Right there. You're working with this. I'm going to highlight that in gray. Okay, highlight it in gray. Perhaps I could choose a lighter gray. Okay, so this is our scrap wheat. And how do you deal with this? This is our scrap wheat. This is our information given to us in the problem. How do we record that? We got cash. We got cash right there. Sold right there. I'm going to highlight that in orange. No, maybe not orange, perhaps in Keon. Okay, we got cash for that, and the raw material right there, 2,000, highlighted in yellow. Okay, so we're working in step 6. step 6 in yellow right there. Cash 2000, cash is 2000 and raw material 2000. You debit cash and raw material, okay? And then you do sales. Okay, in sales method, you would credit sales. You debit cash and raw material with respect to scrap and credit sales. How does it look and how is it different with respect to, let's find that out. Highlighted in orange is the production method. This is to treat the scrap. So in sales method, you cash and debit, cash and raw material you debit, which is exactly the same. Okay. These cash and raw material account is exactly the same, highlighted in count. However, the credit line is different. Under the sales method, you directly credit the sales. I'm going to highlight that in blue. You can see that. You can see the difference, perhaps in green. Okay. The production method, it credits that to scrap material, to inventory, work in progress inventory, and again, it's work in progress. I may have said work in process. It's work in progress. Um, so this is to record the scrap under the sales method right there. You cash, you debit cash and raw material, and you credit sales. Okay. Perhaps I can show you side by side. So now we compare the journal entries. This is for production method and this is for sales method. You can see that right there. This is the two line that is different. Okay. This only sales method fully allocates that to the main products. Production method allocates the joint costs to both byproducts and finished goods. I'm going to show that to you in Kaon right there, okay? And sales method only allocates the costs, joint costs within the main products. So to record the completion of the product, to record the byproducts, and to record the scrap. These are the three main differences with respect to sales method and production method. The two methods that we discussed, the fundamental difference arises in recognition of or allocating costs with respect to main products and byproducts in step 1, the recognition of sales of the byproduct. This highlighted in yellow deals with the the, the sale of byproducts and scrap. If you have any questions or comments, please feel free to post or you can email me. My email address is there.